Another day in paradise, Jack. Another day in paradise.
I can't believe it. I'm loving it.
Look
We
at
needed this.
the premiums are ramping. I love it.
They are. Volatility is kicking in. But is this the start of the August September pullback season out?
Yes, that is the big question. Like we could see a more significant pullback, and we could go below the beginning of August low.
Yeah.
It's entirely possible here, and I don't know. Yeah, might escalate just a little bit. We definitely could see that. So. There is near-term support. We could find a bottom right where we are, but if we don't find any kind of solid footing at all, probably going to develop into something bigger and longer on the downside. And if you give me 1 second, I got to pull up something and then I can share my screen. So, what's your favorite premium selling stock this week, Jack? I picked Gap last week. Let's see if you got
Yeah.
one this week.
I still like IBIT. It's
Back
been
on the IVIT. All right.
uh hood. I'm probably gonna get it. I got the 108 put out there naked. I got the 65 naked put on IBIT. And I got a credit spread going on AVGO and a bunch of covered calls, NVIDIA, IBIT, everything. IBIT,
I've got Gap and it's holding up really well today, actually.
yeah. IBIT has just been really great on both sides. The ability to sell covered calls, credit spreads are great, and naked puts are great. That's just been an awesome stock.
All right, let me share my screen and take it over here. I was actually put a tamale in my face before I came on.
Nice.
So, and here we go, right here. So, S&P 500 could take a little trip down further. We were down. I have this technical support line I call the roadmap line. And if we go revisit that again, that could take us back down in the low 5,000s.
You know what's interesting here is I think there's four stocks that have made up the bulk of the S&P 500's run over 6,000. Meta, Microsoft, AVGO, and NVIDIA.
Yeah.
Now, you're going to see if that stuff cools off and has a little pull back, the entire market's going to have a much bigger pullback. And what we could see is that we get a little program selling even kick in if the S&P 500 gets down there, like where your circles are. Your first circle is 62. 6,000, we will definitely see program selling kick in. And when that happens, they throw the baby out with the bathwater, right?
So where these circles come from is actually my roadmap line on different time frames. Like the 4 hour is right here, and we could see if S&P continues its weakness here, that's a very real target right there on the downside.
Yeah.
And right now we're kind of bouncing off of this 1 hour right here. So we're finding support right here. If we get below the lows we made already today, down around 63.45, we're probably going to visit that 4 hour, which is on down. I base my stuff on technical analysis, and this is my favorite technical analysis indicator right here, Jack. I call it the roadmap line. We'll talk more about that all day today here. So
Yeah,
that
Dennis
price,
about that was AVGO that I'm talking about. Yep.
yeah, we'll get into Jack's picks here in just a second after we do this broad market analysis. So this S&P, if we get below that 63.40, 63.45 area, very real possibility we come down to the 61.50 area right here. And if that doesn't hold support, this is layers of support. You can put alerts in this vicinity and build it up on your chart. So the next layer down, this was that 61.50 zone. The next layer down is the daily chart right here. That comes in right at 6,000. As Jack said, four stocks responsible for the move from here up here. So that's very narrow. It's what I would call that.
Now, at 6,000 though, that's a psychological number too.
It is.
Keep
It is,
Carter.
and funny enough, my my market roadmap line here comes in right there right now as
Yeah.
support. So we've got psychological support, there's probably some fundamental support there, and a technical support level there. So
Now
it's
you
a
got one at 63.45. That could hit today.
yeah, it definitely could. We did kind of bounce off that zone. Just we kind of went down there, touched, and then immediately went higher. So we could break that support later on today. That's a place to put an alert right there.
Yes,
Now,
definitely. We'll probably see some rotation in the S&P 500 too. They'll add a few and kick a few out.
if we saw some weakness that got past that daily support down there around 6,000, that's where this weekly time frame plays in right here. It's going to take something kind of scary happening, maybe like Liberation Day that pushed us down there before.
And in Liberation Day, they threw the baby out with the bathwater. They sold everything got sold, if it was tariff related or not. I mean, that pattern you see in the S&P 500, that's similar to a lot of stocks where they all took a big hit back there on Liberation Day.
And we can see the technical patterns in the chart support doing that again and increasing volatility. So the why, I don't know the why. Jack doesn't know the why. We aren't going to know the why until after it happens. So sitting here going, well, why would it do that? We don't know. Like that's it's part of the fun of the whole market. So you don't
Mostly
know what.
profit taking. After a big run like that, it's not uncommon to see institutions take their profit. The best part about trading is taking a profit. It's the retail guy that is hanging on, kind of left holding the bag, wondering what's going on. But there's been a lot of profits locked in on everything.
And right now we're seeing, that would just be an 18% pullback
No big
from where we
deal.
are right now. It's not really a big deal. This pullback from the highs in February down to the lows of April was about a 21% pullback. So it's not even as big as what we saw during Liberation Day to go retest this support on the weekly chart.
That'd be very healthy for the market to retest that.
Now,
You gotta have it's got to change hands a little bit, you know.
yeah, I, I thought it was funny. I heard over the weekend, I was listening to a podcast that talked about money on the sidelines and how it's really a misnomer because any money that comes to the market, for every buyer, there has to be a seller. So every dollar that comes to the market, a dollar is leaving the market when you think about it. And, prices do move because of more demand or less demand. And higher prices do bring more demand, and lower prices bring less demand. So
And that's a
there's,
very ironic thing you just said there. You touched on this uh, like the other day where stocks going higher, the broad market going higher, that draws in more buyers, right? It's a crazy
yeah.
thing. So they're not here now.
And it is counterintuitive for a lot of people because when the mainstream media talks about the stock market, they use all these economic indicators, the PPI, the CPI, the retail sales, the housing, the this, the that. And in the economy, when prices are high, Jack, what do?
You don't buy, you stop
We,
buying.
we stop buying. But in the stock market, when prices are going up, what do?
Buy more.
Buy more. Everybody like we got to get more. Fear
You're
of missing out.
Yeah, you're missing out, right? That's why you got to remember, folks, the economy is not the stock market. I think our economy right now is too complex for anybody to really get a handle on it. And that's okay because I never paid attention to it anyway. But you got to just kind of tune that stuff out because it does not line up with what the market's doing. Doesn't line up. So
And a
remember
lot
that.
of times we see the opposite happen, or this time it's opposite, next time it goes with what you would think, and it defies logic because the economy kind of works on logic, but the stock market works on fear and greed,
Right. And
and
so many times I've seen
those
so
are
many people get
two.
blown up trying to make sense out of the stock market. I got two good friends that have ruined their accounts. One guy ruined his life uh, because he thought that Tesla was overvalued and it made no sense, you know. And he's like, Jeff, why don't you short this? Why, it makes no sense. And I was like, Larry, it's supposed to make no sense. If it made sense, it wouldn't be a market, right? A market is differences of opinion. So it never has to make sense. It never will make sense. Don't try to make it make sense, and just understand it doesn't make sense.
100% doesn't make sense. Like, it's the craziest game you can play right here.
It's just
Now, I kind of threw up, when I got put IBIT back here at 64.50, I threw up this target right around 71. I actually sold the 69s for this
no.
Friday, or no, last Friday, and I didn't get called out. I still have them because we dropped out by Friday.
When did you get put?
I got put right here at the bottom.
What date was that? Oh, the
Let's
4th?
grab. Yeah, that's going to be Friday. I think I got put on. Let's see, where was price?
I still haven't been put.
I got put on the first. I'm pretty sure.
I want to take it in. I'm
But
not,
what's funny is I sold 4 and I only got put on 1.
isn't that weird? Just, it's just like you'd think there'd be more action to put it all to you.
And the price closed at 64.30. I sold the 64.50s, but I only got put on 1. So that shows you, even if price closes in the money, you're not necessarily going to get put the shares.
Right. And if it closes out of the money, but not by very much, you still could get put the shares. And the reason for that is everybody that ever does an options trade needs to know this. The stock market, when it closes, it's closed on Friday, 4 o'clock. And the options market, the CBOE, has until 11:59 Saturday night to do any assignment. So I've seen times where it's really close, out of the money. It's out of the money, but it's really close. And in that after hour session, if the stock were to fall more, you can get assigned on Saturday night. I've had emails come in at 3, 4 in the morning on Sunday notifying me that I've been assigned the shares or I had them called away. So anything could happen over the weekend with assignment if your strike is close to the money on Friday.
So if you want the risk off, the only way to do that is to close out.
The short,
But
the short, the
yeah,
short.
for a short, yes, for a short.
And a lot of
And
times you could do that for a couple pennies. If you just, do it right before 4 o'clock, you're out. So if it drops after hours, $1 or more, it's irrelevant because you've bought back the short option, whether that's in a credit spread or naked put, and you got risk off.
now, looking at IBIT, this has been up here quite a bit away from my roadmap line for a few months now. Last time we were here, April. Wouldn't surprise me to see it pull back in there to find support. It
That'd be
wouldn't surprise me.
59. Now, Hal Fuller says, are you talking to Jeffrey or are you talking to Jack, Hal Fuller, when you say you have an IBIT trade on Crypto Unleashed that is not doing well? I've never heard of Crypto Unleashed. So
That's going to be one of my products right there. And yeah, IBIT hasn't really moved in a month. It's been a month going sideways, churning off right here. How do
very
you make it? How do you turn a long call into anything? You don't. That's part of the risk. That's a high risk, high reward type system. If this pops, it may pay out, but it's got to take a pop. Right now, we spent almost 2 months going sideways right here.
so when it was about 67, 68, we sold the 73 calls, and time decay is eating that thing up.
Yeah, I mean, that's kind of the beauty of this whole thing is time decay is a beast on IBIT.
Especially in that last week of expiration on any option, but time decay has really been tearing this thing apart. And the guys that are buying calls, which I think we showed you, there was, normally it'd be like 60 to 40 calls and puts. when these I bid options opened up, it was 80% call buyers, 20% put buyers. I've never seen an imbalance like that in my life. We still have a lot of call buying because people think Bitcoin's still going to run. But right now, when it moves flat, you still have the volatility pricing in the option, which you can sell and then just let time decay eat the thing up. Or if you get assigned, it's, have it called away from me at 73, I'm good with that. If I have it put to me at 65, I'm good with that too.
Yeah,
Linda
here you
says,
go, Jack. I brought my. I just remembered I actually had the trade posted in publicly that we could talk about right here. So July 25th, I sold that 64.50 strike right down here. I collected 60 cents, and it was good for that Friday expiration.
wow.
And that Friday came along, and actually I got put those shares at 4:15 Saturday morning right there.
Yeah. That's what I'm talking about.
But I just got put on one. The other three expired for zero.
Linda asks, is it better to close a trade right before market close when it's due to expire? I would say if you're short an option, you want to buy it back. If you're afraid of assignment after the close or over the weekend, just buy it back right before the market closes, because that's the cheapest it's going to be. There won't be any time value left. So yeah, that's how I like to do it if I'm worried about it. Um, on naked puts on some of the other stuff, I'd just take it. But on a credit spread, I'd close it out.
Then on Monday, August 4th, after I got put that 100 shares, I came into the market, sold a 69 strike upside call for
Oh,
38 more cents,
no,
and then closed it out on Friday for a penny.
if you're just tuning in, what he's doing is the wheel, right? So the very first step in the wheel strategy is to sell a naked put. And if you don't get it put to you, then you do it
You just
again.
keep,
Get it
yeah, you
put
just
to you,
keep the credit.
sides, and you sell a call. It's hard to lose on that, man. Just hard.
Yeah, so I still have 100 shares. I got put them right here on August 2nd. On August 4th, I sold an upside call. And then when that expired, I've just been sitting on it because we were pulling back a little bit. And this one actually, let's see, the expiration date on that was 8/15. On the 4th, I sold one for the 15th, which was just last Friday. Last Friday, right here on the 15th, we were already pulling back to 66. I was like, if this has more upside to go, I'd love to catch it on an up day, not a down day. But unfortunately, we've had down day, down day, down day. So I'm just kind of waiting. I don't want to cap that profit too early, Jack.
Oh, you don't want to take it out too early.
Now, the crazy thing on this whole thing, 64.50 was the strike I sold. I got paid 60 cents to do that. And I got paid 38 cents to sell the upside call. If we can grab the handy dandy calculator here. Should I grab that first? And come on, grab the handy dandy calculator. Whatever reason it's not grabbing. There we go. So we've got 64.50 strike minus that 60 cents credit minus the 38 cents credit. Well, actually 37 because I sold for a penny. So I kept 37 of it. My cost in those shares right now, 63.50. Current price, 64.50. So why am I not stressed out? Because I still have $1 profit in this whole thing.
Beautiful.
Isn't this crazy? Isn't this crazy?
I like to start off the trade with a naked put, because you either get it or you don't, and either way you got paid. And if you get it, you're going to get paid again.
Now, if we see a rally here in the next few days, I'll probably sell something up around 71, 72. That's kind of, I'd like to get out at 72 and collect another profit and maybe make $9, upwards of $9 on that position.
That'd be
So
awesome. This is a great one to trade, folks. I don't know of too many better ones right now.
No, not at the same time, Dennis. You should go back and watch the past shows that we've done on profit, right here on Market Masters. We've been talking about this. We're building on prior knowledge, but here's the trades publicly posted on the 4th. I sold that call, but on the July 25th is where I started by selling 4 puts naked or cash secured. In my case, they were cash secured because I planned on buying shares if it dipped that low. Got paid $60 per contract, did 4 of them. That's $240 right there. $240. Let me grab the, I'll grab the, if you want to keep talking, Jack, I'll grab the, where are the recordings really quickly.
Okay. Todd, beside iBit, I'm playing Hood, Robin Hood. NVIDIA, of course. What else do we have? We had iBit, Hood. You had Gap.
Yeah, I have Gap.
Um,
I started last week and then rolled into this week.
yeah. And I'm doing it with ANET. And that's about it right now.
Let's see. There's the replay right there. Copy link. Throw this into the chat for everybody that might have missed any past episodes last week.
Yeah, they've all been great. And tell your friends to come and join us Wednesday and Friday.
Right there you go.
Get Masters replays.
So back to it here. Jack is loving AVGO.
Loving it, man. I'm loving it. I love it. I just love it. It's my second largest position, just to be honest with you. And I just think it's going to go a lot higher. I'm kind of liking this little pullback here. I'm short the 285 put, and I'm long the 280, 250.
All right, let's pull up the option chain and talk about that in a moment. And you're out to this Friday?
I'm out to this Friday. Now I picked up 28 cents
So
on
285 and 282.50.
that's where I'm at right there.
And you said you're on the put side. So
Side.
you sold that one and you bought this one.
Yeah.
And you collected a credit of how much?
28.
28 to 8.
That's 11.2%.
And right now, you're a little underwater, Jack. I hate to tell you.
Well,
Are you
not
worried? Are
exactly,
you worried about it? Are you worried about it?
not a bit. No, I'm not worried about it because I have 3 things I can do here, not just one thing. The 3 things I can do are number one, do nothing if you think the options are going to expire out of the money. So with the stock at 287, I'm doing nothing right now. My second choice would be to unwind the whole thing, and I'd take I had a 28-cent net credit. If I got out of this, it'd be about 60 cents to get out. So I'd give back the 28 cents credit, and I'd give up another 60 cents or so.
Yeah, it's running about 65 right now.
So if I unwound the trade like that, buy to close the sold put and sell to close the long put. If I did that, I'd take a loss. If I do nothing right now and it closes like this, it'd be a win. So first choice, do nothing. Second choice, unwind the trade. And third choice is what I'm going to hang out for, is that if this market really comes apart Friday, which if it was going to do it on a day this week, it would be on Friday. Nobody would want to be long over the weekend. So what I would do if the stuff hit the fan, I would buy back that 285 put. I'd take a loss on that, obviously, because I sold it for $1 something and it's 284. So I'd take a nice loss on that. But I'd stay long the 280, 250. And if AVGO goes down to 280 or lower on a real dump, that 280, 250 put is going to skyrocket in value and make up for the loss I took buying to close the 285 put. Now, this has only happened maybe once a year. But when it does happen, the chance I have a much bigger chance to make a profit, right? A much huge profit. We had a guy make 13 grand on a busted trade where he only made a grand net credit, but he bought to close the short put, let the long put run, and ended up making $13,000. So that built-in hedge, you have a built-in hedge with the credit spread here, and that built-in hedge can really be a profitable piece of the puzzle for you. So those are my three choices. Those are always your three choices. And right now I'm going to choose to do nothing.
Now, one of the caveats there, when you get into these, a lot of people in smaller accounts, you're feeling your back against the wall. You kind of do the most you can do of these, maybe putting too much of your account at risk, and you don't leave any free cash to buy back
Then
that
you're
short.
stuck. Then you're stuck.
I've seen that happen a lot with people. They don't have enough cash to buy back the short and ride the long.
Yeah.
So this is one of those things you need to watch out for if you're in a smaller account. You need to keep the free cash in your account to be able to buy that short.
Now,
If
you
you're,
could make
if
this whole thing worse, right? I've seen it where guys have bought back the short put, stayed long the long put, and the stock goes back up. Now you just got a one big loss after another. So you really got to pick your exit strategy when you get into the trade. That's kind of what I do. I'm already going to lean in towards do nothing if it's out of the money, but you got to have that exit strategy in your mind and ready to go at any time. I mean, I don't get into anything that I don't know what my exit is, right?
yeah, that's the whole plan. You before you even push the trade button, you
Yeah.
should have you should have a primary exit for profit and a primary exit for loss,
Yeah.
and and maybe a backup plan if that's what an emergency exit plan. So those are smart to do, and it's good to do this work on the front end before you ever push it. If you're sitting here coming into a show with other gurus and you're like, I've got this XYZ trade, what do I do? You already got into a trade with no plan. You should always know what to do. And this is one of my key things I harp on with my community all the time is that never get in a trade that you don't have a full plan for. If you're
Right.
reliant on somebody else to tell you when to take action, you've already put yourself at a disadvantage.
Huge. And the other problem is when the trade isn't working, that is the worst time to wonder what should I be doing, right? Because you're making an emotional decision. You don't want to call in to a guru or email in or wonder what should I do now. And like Jeffrey said, you don't want to be waiting for somebody to tell you to get out or stay in it, right? You got to know what to do because like I say, if the stock or the trade isn't working your way, you're already racked up a little emotionally. It's tough to make a logical decision. So always have that exit strategy in your head when you get in, know how you're going to get out. That's just the way you got to do it with every single trade.
And Jack, one of the key things I heard you say last week, we had never discussed this, is you talked about when you get into one of these trades, the max loss is completely acceptable to you.
Yeah.
Like you are going to sleep like a baby and never sweat a max loss on any one of these positions ever.
I
And
already know
that's
what the max loss is. I know what my break even is. I'm fine. Yep.
and that's the same for me. Like I never get into a position without being 100% a-okay with a max loss.
No, I got to tell you though, that you got your risk pyramid, right? And at the very top of that risk pyramid, the most risky trade you can make is buying a call or buying a put, right? And then you move down all the way down low, like, your least risky stock trade might be selling a covered call. That's at the bottom of the risk pyramid. Then you go to the top. So the higher I go up to the top with the strategy, the more I'm willing to risk. And at the top is buying calls or puts. So whenever I do that, I'm 100% fine with losing 100% of the money.
And I go into even credit spreads. I'm okay with a max loss. Like I won't size it to a point where the difference between the strikes minus the credit is going to hurt.
Right. So if you look at this trade right here with Broadcom, I've sold somebody the right to put the stock to me at 285. And that means I also have the right to put it to somebody else at 280, 250. So even if the stock went to 100, the most I could lose is the difference between strikes, because I got the right to put it to somebody else for a little bit less than I had it put to me. And I'm cool with that. I'm totally fine with that. Again, I'm 96% right. So I'm comfortable with my strategy and my risk.
And you got paid almost 30 cents. So your actual risk is 232.
Yeah.
Because you got paid when you got in this trade. So the most Jack would lose, worst case, $232 per 100 shares per contract, plus any commissions that he had to pay.
No big deal. I'm fine with it. And I expect trades to
Does
work.
everybody understand? Everybody with us? Anybody lost on why this is?
I love this strategy. I love credit spreads. I love having that hedge. I love limiting my risk. I love lowering my capital requirement by buying that lower strike price put. Uh, Personally, I love this. And the thing I love the most is I get paid up front. And like I say, you would think you'd only get paid at expiration if you were right, but that's not how it works. You get paid up front. So you're hanging on to the money no matter what. Right? You might have to give it back, but you got paid up front. And just coming from Gary, Indiana, I love getting paid up front. Right. So that's my thing.
So Jack, when did you get into this trade?
Tuesday, always on Tuesday.
So that was yesterday.
Yeah.
Yesterday, right? So we're 1 day into this trade. You're upside down a little bit, but you still got Thursday and Friday to go. So you're not really concerned, is what, one of the points too, is that you still got the best thing working for you.
Even if the stock was at 280, I still wouldn't worry a bit. Right? Because I got the hedge. Right?
Jack has the best thing on his side right now.
Spell it out in all caps, Daddy. Yes, I love time decay. I love it. Once I figured out how powerful it was, when I lost all my money on my first straight up call buy, and I watched that time decay eat away at the stock, even on days where the stock did go up, right toward expiration, the option price would go down. And I just got killed doing that. But then when I realized what a force time decay is, really huge, unbelievable force in the market. And you want that working on your side. When you have it on your side, you're pretty much good to go. So Dennis asks, did I use a certain delta? Just to Jeffrey's laughing already because I've never used the Greeks in my life. I've been doing options trades for 40 years, and I've never one time used the Greeks to help me. Not to say they can't help you if they help you use them, but right, I'm the Homer Simpson of the trading community, and Homer ain't getting into the Greeks. That's too much. My head hurt reading that stuff, man. I'm just down to earth, right?
And we have plans to talk more about the Greeks and maybe a little bit of my knowledge rub off on Jack along the way, coming up in future Market Master sessions. It's one of the things we discussed that we might talk about moving forward is getting into a little bit of the Greeks and how they might help give people like you an edge, traders an edge.
It can. When I see guys do it, Jeffrey, when I see you use the Greeks and Kane, it makes 100% sense. He only uses the Greeks. He leads himself into a trade with just analyzing the Greeks, gamma and stuff like that. I like Greek food, but I can't get into the Greek terms with options. That's it. I'm drawing the line on my Slovaki.
Hey, I like a good euro. All right. Yeah, we're here to have fun, everybody. If you have questions about how to trade, how to make money, especially in income trades, which if you're trading, hopefully you're making income, period. But if you have questions, throw them in the chat. Jack and I want to address what you want to know about this stuff.
Yeah.
So that's part of the whole reason we started this show.
Okay, Dave. Dave has a good question for you, Jeffrey.
Yeah. On
Says,
put side options, volume listed, is there a way to see how many are buys and sells? Hmm. Not directly on a option chain like this. Now, if you give me a minute, I can pull up something and show you that what a broker gives you as far as data. So give me just a moment. I'll pull up a broker platform and we could dive into that just a little deeper. I didn't come prepared to do that, but we can jump into that. Give me just a moment to grab an actual trading platform. And it's not open interest doesn't tell you much. Volume doesn't tell you much. You actually have to start looking at what happened. Where did the volume come from? Which side? Time and sales is the most accurate way to see. And then you have to track, did those transactions happen on the bid or did they happen on the ask? Or
now,
somewhere in
the only
between.
way I know to do that is with a Bloomberg terminal, and that's not cheap. Conrad has that. Just so you folks know, when we put these trades on, we have a third party auditor that audits every trade we do to determine what the win rate is, so forth and so on. So, like Jeffrey's trades, they're all audited. This is not stuff we just make up.
Yeah, and I do post these trades publicly right here that I was showing. So these are audited by K-Info and by Conrad when I have to submit that to be audited. So it's not like we're just out here throwing out stuff and not actually making money and trading.
Oh, this is all the real deal. Now, the other thing I got to tell you is, there's other companies out there that do trading education. But I'll just tell you two things. One, I know a lot of those guys and they don't trade. They do not trade. They go find a trade in the market that they like and they issue an alert on that. They don't put their own money on the line. The second thing is, I don't know of any other trading education firm that uses a third party auditor on every editor's trades, just here. And that's how full transparency and how what you're looking at is the real deal. And if it's not a good win rate, we don't have a strategy. We ditch the strategy, but everything you read about and see here with us is the real deal.
Now, I'm going to use Tasty Trade. Other platforms, I know E-Trade does this. I know you can get the same kind of information on Thinkorswim, and they actually have a little table at the bottom of the options chain to tell you what their model suggests is the above the bid, below the bid, at the bid, that kind of thing, above the ask, below the ask, those kind of transactions to help you kind of glean some information. But one way to do this, and this is not the way, this is just a way, you come into Tasty Trade and you can go open a Tasty Trade account and put $5 in an account and get the same kind of information. You right click on a price and it pops up this little button right here, view option chain or option chart right here. And all of a sudden, these green bars where price is going higher, there are probably some buys. And these red bars, there are probably some sells. Now, are they guaranteed to be buys and sells? No. Absolutely not. But remember what Jack and I were talking about. When prices are going higher, people buy. When prices are going lower, people sell. So that helps you see, and then you can grab the volume, and you can actually dive down in here. This is a 1 hour chart. We can pull it on down, look at a 5-minute chart, and get it even tighter. You can look at it by 5-minute periods and see how much volume was pushed in each one of those candles. All right. If you've never looked at a chart, this is the actual options price chart right there. A lot of people don't even know how to pull one up right there. So maybe this is a little information that I gave you. How do you pull it up on TradingView? I don't think they have these yet on TradingView. But a real life platform, you can actually pull up those option prices, look at the volume and the price, and it gives you an idea of whether they were buys or sells. All right. Well, cool, Dave. Glad you maybe learned something here today. I know E-Trade does that. Like I said, Thinkorswim does it, and Tasty Trade does it. Those are the three platforms I use for pulling up option price data right there. And Jack, I don't know if you've delved into that much. I know the way you trade, it doesn't really matter much, but
Too
that's
much, man. It's too much. It's too much. Every
I would
time
say,
whenever we're talking about stocks, it's all so simple, right? But every time we get on a show with other guys talking about options, we're all over the place, right? Just like, people are using different options platforms, Option Omega, or all these different things Kane uses, and it's just crazy how much information is out there. I think you can get paralysis by analysis if you read too deep into this stuff. And it'd take me an hour to do a trade if I looked at all the stuff, where I just like to keep it simple. And I don't think you have to make it that complex. From what I've seen, Jeffrey, your style is very simple.
I try, I have this mantra, keep it stupidly simple, because the more complex I make it, that's the more opportunity I create for myself to make mistakes.
Yeah,
Um,
I agree. 100%.
and I don't like making stupid mistakes, especially when I look back at my trading. Some of the biggest losses I had were because of stupid mistakes. So
Amen, brother.
if I can cut out the complexity and keep it stupidly simple. I mean, most people say keep it simple, stupid, but I don't like to call myself stupid, so keep it silly, stupidly simple.
I say keep it simple, stupid. I'll tell you how stupid I. And this was an SLV. Yeah, here's a good, it's stock market story time with Jack Carter. So I'm going on a trip from Boulder, Colorado to San Francisco on a motorcycle by myself. And I tell myself I'm not going to look at the market at all while I'm gone. I don't want to think about it when I'm riding. So I got SLV this a long time ago. I go to sell it on a limit, which is what the bid was, and I closed the laptop, went to pack my stuff, got all ready, took the ride, come back. A couple days later, I'm still on vacation. I'm back in Boulder. I look, I'm still long this SLV. Now, how did that happen? How the hell it happened is I should have just sold it at the market, right? Especially me, I don't care about a couple pennies. Why I put that in on a limit and it did not get filled, it just dropped right after I put that in. That's stupid. I lost a lot of money. That is just dumb. So just try not to be as stupid as me. Linda said, when trading spreads, which platform has lower commission pricing? Well, there's not really a commission on the options, there's a fee. And I think Robinhood is the cheapest, aren't they, Jeffrey?
Yeah,
No
I,
fee.
no fees, and actually, there's a record right here. You can see they charge me no fees,
They're the
zero
only
fees.
one who knows that does that. I don't know any other. I'm paying 60 cents, I think, per contract at Slob.
Yeah, I mean, like brokers are all over the place. That's one of the things they compete on is price. Robinhood beats everybody, but they do payment for order flow and kind of front run you a little bit according
Terrible
to,
customer service too. So get
and
ready for that.
so it just depends on what you're going for. Are you going for, I've only contacted customer service twice in 20 something years of trading. Contacting customer service is not usually something that I need to do. So I don't look at the customer service as like one of the things I measure a broker on. Pushing 12 contracts here and paying zero fees, that matters to me.
All day long.
So
Yeah,
there
if you
you
don't
go.
need
And
customer service, if you don't need them, then you're fine. I've only called Schwab twice, I think, in the last 5 years. One time when they assigned me on a bad trade, I kind of let them have a good earful. And the other time when I transferred an account and it said it was all transferred, but it was still missing a ton of money. That's the only two times I've ever called them. So if you
and
know
this
what
is
you're doing, you won't need to. And if you can chat with them on the platform, that's okay too.
and this is the trade we talked about last week, right here, as the trade of the week. Sold for 15, bought back for a penny, kept $14 per contract, did 12 contracts, $168. Did I sweat it? Not at the 19 strike on Gap, right there. And then I turned around and did it again for this week, except I did the 2050 strike. right there. And we can pop over here, look up gap. And the 2050 strike is currently out of the money. It was in the money just a little bit earlier today, but green candle. I'm sitting right there. Now, the chart technical pattern that we talked about last week was gap filling the gap back up in this vicinity over the next couple months. So I may continue to sell
Wow.
puts all in here
And
as this thing goes higher.
you got a nice dividend there too if you get the stock. Are you long? Did you have it put to you yet?
Not yet. Last week was I sold I just started this last week. Sold that 19 strike for 15 cents. I did that on Monday. So Tuesday, Wednesday, Thursday, Friday. By Friday, I collected $14 a contract, 168 bucks, and never sweated it.
Cool. Jeff says if you have Schwab, you can call and negotiate commission. He recently got his lowered to 32 from 64 cents a commission. That's half. That's beautiful. Matt asks, can it be asked what trading platform is used in majority by you guys? I don't know. I use Schwab and I use Thinkorswim, but I think everybody else is all over the place.
Yeah, it's kind of a loaded question asking me. I've opened a brokerage account almost everywhere so I can load up a platform and show followers how to make a trade. Now, I place the most number of trades right now, the most, actual get in, get out, the most number of trades I place at Tasty Trade. It's the highest volume of transactions. I have the most money that I manage for my family at E-Trade. I have the single biggest taxable account that I manage at Robinhood, and it's tied up in this account that I have on the screen right here. I'm up 24 grand so far this year. Right there. That's the single biggest taxable account I trade. And then I have smaller pots of money at Webull and Interactive Brokers and Thinkorswim or Schwab and Alpaca. And you may not have even heard of that. That's an algorithm broker. You actually trade with code. And, then I have crypto platforms like Coinbase and crypto.com. And I spread it around. And good, bad, or ugly, growing up in rural East Tennessee, I have this no one thing's going to blow out my whole trading account. So I keep it spread around. It's, no one break-in's going to take all my stuff. No one hack or account blowing out is going to wreck everything. So good, bad, or ugly.
I got HSA account at Fidelity because Schwab didn't offer it. So I got that at Fidelity, and I do the same type of trading in the HSA account that I do everywhere else. I also have an account at JP Morgan. It's terrible. Their online platform is so bad. I got talked into that by a friend, and it's horrible. But I had a large sum there. I have a little bit over there, but I moved the bulk of it over to Schwab. The money I manage for my family is at Schwab. My own IRA, wife's IRA, people I manage it for, all Schwab. And that's it, just JP Morgan, Fidelity, and mostly Schwab. And then I got a Coinbase account and a crypto.com account as well.
And Jack, I just saw this alert fly off in the bottom of my screen here. This is a day trade. It's playing 0-day options.
All right.
And this is using my technical pattern. We were talking about my technical pattern on the daily chart on S&P 500 when we started. This is going down to the 1 minute time frame right here. And there's another one on Tesla right there firing off. Same system. So this technical pattern, we get a pullback. We set the fibs. We go from the high to the low. We're looking for it to cross this orange market roadmap line. Then we come back above. We get a candle close. Has to be a candle close on the 1 minute time frame above the 618 fib. This creates a high probability opportunity with a. Ask your question.
Tell us, what is a candle? I use color-coded bar charts, but what
Yes.
is a candle? Tell everybody what that is and why do you like it?
So a candle is summarizes the price action that happens in a time frame. And the time frame we're looking at is 1 minute. So you get the opening price for the 1 minute is the open. You get the highest price on a candle. And we can zoom in here a little bit and talk about what that actually means. Like this big red one here, we would have opened right there. The highest price was at the open. So we have a flat top. The lowest price during 1 minute was down here. And then the close was right here. The open to the close makes a body, the fat part, and then the high and the low make the little wick part, either at the top or out the bottom, right
So
here.
that red one you're pointing at, that didn't have a little wick at the top
Yeah,
because
it
that
did not.
top.
It did not.
I see.
Now,
They all
now
got a
this,
wick somewhere, right? At least one wick or no?
they don't have to. They can be a solid body if it opens at one price and closes at another price and doesn't go outside of that. Like usually you see that when there's strong price action. Let's see, we got one right here, this green one. We opened right there. We rallied the whole minute and closed right there. No wicks.
Boy, that's
That's
complex, man.
that's a strong candle. But the candles don't really matter so much. It's as I need this price action to have a high, to have a low, to cross over my orange line, and then to get a close above this 618 line. And I have this all automated, so you don't even have to worry about this, Jack. I have a system that sits here and looks for this. And
Is
then
that
when conditions are right, is that what?
what is the gold line? EMA, or what do you use to determine the gold line and plot that gold line?
So I call it my market roadmap line. And I'll actually pull up the indicator for it and show the code right here. I'll add just that indicator and we'll pull up the code and look at it. Come on, load that code.
And that looks like a lot of.
It's really simple though. It's actually the 144 EMA and the 169 EMA, and then I color them orange between them.
Oh, nice.
So it's really simple. It looks complicated, but it's actually very simple. So I
Now,
plot the
why do you like those
144.
EMAs?
No, it's because they're Fibonacci based.
And what's Fibonacci?
So Fibonacci is a form sequence that starts with 0 and 1. You add 0 and 1 together and you get the next number of the sequence, which is 1. And then 1 plus 1 is 2. 1 plus 2 is 3. Then 2 plus 3 is 5. Starting to get the picture. 3 plus 5 is 8.
I'm
On
not
and on.
You're way
You
over
go.
my head, man.
Yeah, this is math stuff. I'm an engineer. I came at this math wise. But funny enough, the relationship between these numbers that I'm talking about, when you look at your hand, you pull your hand out in front of your face, you notice how like the bits of your hand, like your fingers so long, your palms a little longer, then your forearms even longer. Those same proportions are all Fibonacci numbers
Hmm.
right there. And weirdly enough, believe it or not, we humans tend to recreate these patterns in everything we do because it looks normal and natural to us, these proportions. We do the same thing in the stock market. We create these proportions of moves in the stock market. Believe it or not, I for a long time, I looked for something that worked and made sense to me. And this is what I came on, this technical pattern in the market.
I love
And
EMAs. Man, I think that's one of any
so
EMA
I,
thing.
so I use these EMAs as my kind of like filter, if you will. I look for price crossing it and then confirming by moving back above. And then we set up this high probability, which I call it high probability because the back tested numbers show on average across 50, 60,000 trades, it's 74.8% likely once we get the close above the 1618 to advance up here 90% of the way to the 1272,
That's
which
a great,
I,
that's a strong number. So you're not buying on that dip. You're not trying to pick a bottom, right?
no.
You're actually, and that's smart because I don't know anybody that can pick bottoms, but that's a much smarter way to let it go down and then get a confirmation close above your gold line. That's a brilliant way to trade it because that way you're going with it, right? If you're trying to buy a bottom, that's impossible. But if you jump on an already moving train, you're going to have an easier time taking a profit.
So this is my signature trend, which the price was going up in a trend. This was a pullback. We made a higher low, and this would be a continuation pattern, going higher again, making a new high. So this is a trend pullback continuation pattern. Some traders like that kind of thing. I love it. That's where I finally found success in the market, is when I gravitated toward trend pullback continuation trades. You know what pullbacks bring, Jack? Big
Opportunity.
premiums, opportunity and big premiums. It's a great for a credit seller to grab these pullbacks right here. And the high probability for a continuation, if you make a bullish trade, that's on your side. That's stacking probabilities on your side right here. Now, if I pull up the statistics for this particular trade right here, this might blow your mind a little bit. We're just talking IWM right here. This particular pattern over the last 25 years has won 84% of the time on IWM
Wow.
with 4,800 trades. So it's not like this was just a couple times.
That's a great sample. 4,800. That's a great sample. You know it's real. 84% win rate. That's all you need. You're killing it with that kind of a win rate. You know, we talk about win rate a lot, and I've known guys that have maybe a 55% win rate and they're still profitable. But those are pros. But for most people, it's that other 45% of the time that you're losing that just kills them emotionally, right? So when you got something that's 84%, then only 16% of the time you could see a loss, right? Most of the time, 84% of the time, that's a strong win rate right there. That's a high conviction trade. That's what you want. Stack the odds on your side. That's really awesome, dude. Now, how many times would something like this come up in a week?
Now in a week, actually in a day, I've built a system that alerts these on SPY, QQQ, and IWM, all three indexes, boring indexes, but they all have win rates right around the same 80% with
That's
this
insane.
pattern on a 1 minute time frame. Now, you might be like, well, this is sounding complex, day trades. How do I get the alerts? All that sort of thing. Lots of questions about it. And Jack, how many trades could I expect? Oop, let's pop that back up. So I've simplified the whole thing into an alert system that actually throws out these alerts, like this IWM one right here, and breaks it down for you. Tells you it's an entry, tells you the ticker, tells you what the entry price was, what the target, what the stop was, potential upside, potential risk if you're buying shares, and then it suggests an option if you want to play a 0-day option to take advantage of this move right
So
there.
it's picking the one that's slightly in the money.
It's actually going, like, it looks at where the entry is and where the target is, and it looks to see if there's an option between where the current price is and the target. If it can get that, if there's an option there, it'll pick that option. If there's not one, it'll go slightly in the money. All right, that's, below current price with a call, so that you have intrinsic value as we go to the target. And then once we get the target, you'll get an exit alert. Here's the two for SPY and QQQ closing out right there.